What's up, YouTube? Welcome to the Boeckle Bros Channel, where we talk all things real estate. I'm Jesse.
And I'm Landon. And on today's episode, we're going to talk about what we've made so far in first quarter of 2021.
We're talking about the good stuff. We're talking profits.
A little bit of money.
2021 so far has been a great year for us. To be honest, we're super fortunate with the way things have gone, especially coming after like the tail end of the craziness of 2020 and the pandemic.
Yeah, you know, we started this year on a heater, and it's okay to say that. I'm excited to say it.
It's great.
So far in 2021, we've purchased 23 new flip properties.
Right.
We've already closed 12 properties.
Closed and done.
And our projected net for first quarter of 2021 is $1.2 million.
Pretty crazy, guys. We're very, very happy about it.
It's an insane increase over the last couple of years of flipping.
Right.
But that's because we made some good decisions as well.
Absolutely. And so what we want to do in today's video is kind of dive into the last 2 to 3 years and help explain how we've made those changes and how we've made that growth. So how we were able to change our business so drastically and grow year over year over year is because we actually made an intentional decision.
Right.
This isn't something we stumbled into, it's something we actually decided.
Yeah, we found ourselves competing in a highly saturated market of other investors and other flippers here in Vegas.
And it's gotten even worse last year during the 2020 pandemic when, to be honest, my personal take on it is the fact that people were a little bit scared to do anything.
There's a lot of pullback.
Right.
There's a lot of pullback from local investors, not only in our market, but I'm sure in many other markets around the country.
Pullback from investors and pullback from your regular routine retail sellers who decided, you know, with all the craziness that's happening in the world, I don't think this year is the right time to sell my home. And what that did was create an extreme scarcity of inventory in our market.
A huge nosedive in inventory, all the way down to less than 1 month of inventory on the market today. So it was a steady decline all the way through 2020, even with the COVID-19 pandemic.
And I think you know this a little bit better than me, but like, what should a healthy inventory be?
So a healthy inventory is considered 6 months of inventory on the market.
Okay.
That is a balanced inventory. Anything less than 6 months of inventory is considered a seller's market. Anything more than 6 months is considered a buyer's market.
Due to this extremely low supply and inventory in our market, what is happening is that investors are now competing more than ever. They're actually going after properties because there's so many less properties to choose from by the dozens.
Right, we found ourselves in the position of high competition. We were overpaying for some of that product at those, you know, medium to average price points of $300,000 and below. You know, and what we really found is owner occupants are also starting to compete on those same properties. Distressed properties that are typically investor-friendly properties, owner occupants are coming in and buying because of low inventory.
That's just because they don't have any options. They don't have anywhere to go. And so I never want to be put in a place where I have to decide in my business, let's just make less money because we have to overpay for the home. So that environment of extreme competitiveness we're finding is mostly in the starter home range for our market, which would be the more affordable home range, basically $350,000 and below.
Yeah, and why is that? Because as investors, most investors are utilizing private money loans or hard money loans that have a higher interest rate on them. So as the price point increases, that interest rate actually increases with it, which therefore puts a much higher risk towards each deal.
Right.
Now, naturally, people are a little bit afraid of high risk. And that's what's really allowed us to take our business and go from the average price point of $300,000 and below and really work in the less competitive range of $500,000 and up.
Right. So fortunately, it's a very good point. Fortunately, our private money allows us to do that. It gives us the ability to scale up into the higher price point and not incur those kind of fees and higher interest rates that happens to a lot of other maybe borrowed or hard money.
Right. And we're talking a lot about hard money versus private money. So check out our video below in the description on the differences of hard money versus private money when it comes to flipping real estate.
So let's get back into the extreme competitive nature right now that we're facing in our Las Vegas market. Now, due to this, we've decided let's zig while others are zagging. So what that means is let's go ahead and look at a higher price point, maybe 500 and above, where there aren't as many competitors, there aren't as many investors playing around in there.
Right, and we didn't do it just to say, hey, let's take a huge risk, let's take much higher risk and put ourselves in a position where we could possibly be in trouble at the end of the day. But we closely analyzed our numbers and our current business model and decided that the higher end luxury properties were actually making us more money and they were selling faster than the medium or lower price point properties as well.
So let's rewind and go back to 2019 and kind of explain how we've stumbled into this.
Right, so here's a breakdown of our numbers for the last 3 years, 2019, 2020, and then coming into 2021.
Right.
So in 2019, we closed 40 properties. That's closed from start to finish. With that being said, our average price point for 2019 was a $260,000 purchase price. Now, our average profit margin for each property was only $17,000 profit.
Right, which not necessarily that's bad, but once we go on to explain how we made a change, it gets a lot better.
Right. So moving into 2020, we did only 41 properties, one more than 2019.
So same level of inventory.
Right. However, our average purchase price went up to $305,000 and our average profit margin went up to $30,000. Almost doubled for 2020, just creeping up above a different price point.
And to be honest, we want to be fully transparent with you. From 2019 to 2020, we didn't necessarily make that intentional decision to raise our average price point purchase. It kind of just happened naturally because I think we went to where we found less competition. But then the difference being from 2020 to now 2021, we looked back on the difference of those years and said, let's actually take this, let's double down and run with it.
Let's make it intentional and actually go after the higher price point properties for a specific reason. And now that we're in 2021, our average purchase price is $475,000, and our average profit margin, you wouldn't believe it, for 2021 is $60,000 per property.
So from 2019 of $17,000 per property to 2020 of $30,000, that's almost double. From 2020 of $30,000 to 2021 of $60,000, that's almost double as well.
Right, and that's a huge incremental increase year over year.
Right. So it's not, one thing to remember is that it's not always just doing more volume. If you're able to actually increase the profit you can make per deal, doing the same amount of deals will make you more money.
You know, with over $1 million in scheduled for income just in the first quarter alone, it's absolutely going to be one of our best years yet. We have confidence in a strong market. We have confidence that the market is going to continue to remain at a low inventory level and with high demand. And we think that's going to continue through 2022, possibly into 2023. Really, we want to hear your guys' thoughts. What do you think is going to happen? So it's been a fantastic start to the year. 2021 is by far going to be our biggest year yet in terms of revenue.
Right, so that strategic decision that we told you we made, we feel like is definitely paying off big time. And we actually have a pretty optimistic look at the next at least 12, 24 months, especially in our market.
Right, I think it's clear. We're doubling down. We're going all in and buying as many properties as we can possibly buy. We're confident in the market. I'm confident that interest rates are going to stay low and demand is going to stay high. That's what we think, but truly, we want to hear your thoughts. So drop a comment in the comment section below. I want to know, what do you think is going to happen in the next 12 months with the market?
What do you think is going to happen in your market? And what are you experiencing with inventory levels right now where you are in the world? Are you finding extreme competition in your price point? Are you thinking about going to a different price point to try to evade that? We want to hear what you guys are going through. You've heard our thoughts and our opinions on what's going on in our market, but we want to hear yours. Also, check out our other video on what it's like flipping during a pandemic below.
Thanks for watching today. We really hope you enjoyed this episode and that your 2021 is going as good as ours is.
Right.
Please subscribe to our channel.
And if you have any questions, again, always comment below.
Until then, we'll
See you on the flip side. you.